Hi, welcome to the Market Alert for Thursday, the 2nd of November 2017. So yesterday, non-event really for the pound. Market sideways, waiting for the Fed's news at 6 p.m. And as we saw in yesterday's Market Alert, the week's big non-event, it turned out to be as well. Nothing changed, everything remained the same there. The daily chart, price is still sideways to high. You can see we've got a bit of an uptrend going here. We're also above the 20 bar average, but we've still got resistance at 132.87 that needs to be taken out if prices are to move higher. News wise, what have we got today? Construction PMI from the UK, that's at 9:30, and then we've got Bank of England inflation report and monetary policy, and also the release of the previous month's voting for raising interest rates. And in fact, if you look closely here, you will see that we have a prediction to raise the official bank rate from 0.25% to 2.5%. So if this goes up, then the pound will go up as well, and that's at midday. So don't expect an awful lot until this point. A lot of news out after this, most of it out before the Dow. And we've got Barmy Carney out at 12:30 p.m. He's going to come out and probably justify why he's increased interest rates by 0.25%. And FOMC member Powell is also due to speak as well at 12:30 p.m. And it's interesting that he's mentioned there. And also Dudley. And the reason I mentioned Powell is because it looks like, according to the Wall Street Journal, that Trump has picked Powell to be the next Fed chair. But only time will tell, and be able to confirm this to be the actual case. We'll just have to wait and see. So that's the news today. A lot of news out. The main one is the UK to increase interest rates, and I won't be at all surprised to see that being confirmed today, and the pound driving through these resistance areas as well. Now, good news on the Dow as well. We're getting a bit of volatility. Yesterday we saw the market move over 100 points in range, which we haven't seen for a very long time. Market attempted to move higher, and then we headed lower before the Fed meeting, which is again is unusual. But no surprise to see them bring it back 50% of the move thereafter. And let's see what happens. We're starting to see a bit of pickup of volatility, and more so than that, they're actually allowing the market to move lower. And on the overnight, we've seen the market move back to the downside as well, which is great. So we're down 150 points really at one point, and then bringing the market back to the 23,397, where the market's been range bound for most of the night. So in the daily chart, let's have a look and see how this is starting to pan out. Very interesting spike here in the volatile volume. Note this, very interesting indeed, because that's the biggest spike we've seen in volume for a while. Not only that, but we've got the market coming off the highs as well. So the market's thrust prices up to the upside, sucked a lot of people in, struggled with 23,485 where we had this resistance, but at the same time managed to put in a new all-time high at this level before moving back to the downside. Let me just remove that, and also let's make it a bit clearer. So this is going to be interesting to see how this pans out. At the moment, they're bringing the market back. They're absorbing the selling that's coming to the market, and no doubt, again, as I said yesterday, we're going to hit the Santa rally. Powell may be confirmed that will move the markets higher as well. It's still higher for me at this point, and the market is still showing that. But very interesting that we've got this spike in volume here. That's a lot of volume for a long time, especially when you look over here, as we've mentioned before, how it's dropped. And now it's like one of these distribution phases again, where the market's sideways, allows the pros to offload to the general public, which we saw last December. And and then prices It's either that or they're absorbing the selling that's coming into the market. It's one or two things. It's hard to say unless the market breaks to the downside, but at the moment it looks like some of the pros are thinking of jumping ship, but at the same time still bringing the market back to the highs as well, which is easy to do when you've got high frequency trading systems. Right, quick look at the implied volatility before we conclude. So the implied volatility down just slightly, 933 down to 930. Given the fact that the market dropped over 100 points, you'd think this would be higher, and it's not. So again, this is also confirming that they don't see the pullback yesterday too much of a concern, and it's likely they're going to send the market back to the upside again, unless something geopolitically comes out that surprises the market or shocks the market. Other than that, it's a normal service as ever, as they attempt to move the market back to the upside, and say the implied volatility seems to give that impression as well. Right, that will do it for this one. Let's see what Carney has to say and what the BOE decide to do on interest rates. Looks like they're going to increase them. That will send the pound higher. Be the first time we've seen a rate increase, I think, in the UK for 10 years. It was probably actually more. It's probably closer to 11 or 12. I don't know the exact date, but it's going to be some time since we've seen a rate increase, certainly 2007. So, 10 years since we've had any sort of rate increase. Probably 2006, if I'm going to put money on it, I would say. But anyway, irrespective of that, it's been an awful long time since we've seen rates moving to the upside. So it'd be interesting to see how this is going to be the start of a new trend, as in the US, where they've increased rates for the last 18 months every quarter during their live meetings. Right, that's it. As ever, thanks for watching. See you in the next one.